the biggest bank failure since 2008. Silicon Valley Bank fails over the weekend, Wall Street tumbles, and this is how the gold market opened today. Good day everyone, Anish from Black Bull Markets. 13th of March, market open after the biggest bank collapse since 2008. Silicon Valley Bank over the weekend, in our time, Friday night, Saturday, announced the official liquidation of its assets, and as a result, of course, we saw stock markets fall and the anticipation for the gap realize as the market opened. We saw a 1% gap in gold, almost 110 pips to the upside, with investors pricing in higher risk in the markets. However, on the index front, we are seeing a bit of a recovery for the futures on the US markets. And this could also be because of the positive jobs number we had on Friday, with NFP pointing 330,000 new jobs created in the economy. Also, that could mean worrying signs and pressure for the Fed, who could have higher expectations to hike larger amounts this time, with Federal Reserve Chair Jerome Powell saying that a 50% basis point hike is not an unlikely scenario. Let's get into the charts and have a look at the gold chart and see how the market opened. Well, what we can see, it jumped from the 1866 mark, where we saw a market close, and a lot of longs over the weekend might have got hurt as it opened up towards the 1870, 1880 mark. We saw it as the market opened, it hit a daily resistance level around 1893 and so far rebounded. The gap still exists heading down to 1870, and we could see a close just there to fill the gap should we have enough liquidity through the day. However, it is looking pretty ominous in terms of the geopolitical sphere, and what you can see on the chart is an 1890 resistance holding pretty firm from today's move as the market opened. So you're looking at 1893 to be exact. Now a move above that could well put in 1900 again, so that's what's on investors' minds heading into the trading week. Now, all the underlying fundamentals are still in play. We're still in a relatively cumbersome place as it comes to interest rates across the globe. We've got UK inflation data out also this week, which could continue to paint more worries for the market, as we're seeing persistent inflation occur and interest rates stay at relatively high levels, decade high levels in some countries. What we can see though on this gold chart is this move is somewhat exhausted at 1893. You do have a support level towards the start of the gap or Friday's close, and those are the levels that you should be placing in on your chart. In addition to that, you do have a bit of a confluence zone here, which ended around 1890, which dates back all the way going into January as well, as an interesting level to look at. So we've got these levels on our chart here. Again, 1890, 1900, gold does work well with key resistance areas. If we draw up a fib on the chart as well, we might be able to see some other interesting areas that we could look out for through our analysis, and which could also actually well play into part with what levels we've drawn in already. So 61.8 points at a $1,900 an ounce move to the upside. Again, a firm resistance level on gold. So those are the levels to watch. RSI is pointing overbought territory on gold. However, with the underlying fundamentals at play this week, we could see more space for it to move higher if we do get a clearance of 1890 and then 1900. Again, well on the cards. Seeing that equity markets have rebounded, we could well see some sort of settlement, or rather investors' cautiousness reduced as markets begin to rebound, pricing in all of that action from the SVB crisis over the weekend, and moving on into the week focusing on economic data. It's a key market to watch this week. All the best, do stay tuned and feel free to ask us any questions if you have any. All the best.